Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over options data. And so I am recording this on Saturday, December 7th, and this is the sixth week of highly regarded options theses. And so I put it up there just so you know. And so actually I know because I always forget to say highly regarded. And this is a little series I've been doing really just for myself to be keeping track of call and or put options that are long dated that I think could be resulting in some nice profits. And so this is really just tracking my journey and learning more about these and sharing that with you guys. So I hope you do enjoy. But before I get into the options data, I am just going to give a little intro on what I'm going to be going over. But if you want to skip this, if you're familiar with it, just want to note that there are going to be timestamps to all of the tickers, so you can skip ahead to the one that you like. But I would recommend sticking around for the whole thing. Grab a cup of coffee or a beverage of your liking, and just hang out as I go through some of this data. But before I get into that, like I said, I'm just going to go over a little bit of an intro. And so this effectively, is just, acting as my personal trading journal, just a documentation of that. And, this is for educational purposes only, for fun. And that is to say that none of this is financial advice. And I will caution that some, if not most of these trades will be bad, as I am learning. And I would say that most, if not all, of these contracts will be going to zero by expiration. So, options are very, very risky. And so that is why I am, I'm documenting this just to, ease my way into positions and to, document the wins, whatnot like that. Also the losses as well. And I should note too that plans do change if I do talk about something looking nice, maybe some news drops and that changes. So plans do change. And also, I feel like, I could get made fun of for this. But these are spreadsheets that I put together using data from unusual whales, but I manually put them together. So there could be typos. So it's quite possible I get a price or a number, a percentage incorrect. So take it all with a grain of salt. And as far as unusual whales goes, I am just looking at the data that really stands out to me and kind of extracting what's useful for me in my journey learning more about options, how to swing them in a way that works for me. What I have found is that, everybody is very, very different. Something that works for you may not work for me, and vice versa. And so I'm just doing what seems to be working for me, just as far as how I manage my risk, my emotions, all of that. So definitely something to keep in mind. And then, I'm just going to go over this thesis here really quick. There is a couple things I did want to add to this. So I do have this, do not fall in love thing here. These are all swing trades. I'm not diamond handing any of these. But I also think that it's important to note that the heart does represent to not be jealous and to not FOMO. Because I think that is, how options can be really risky. And, I have covered some of the tickers here right around bottom, but I kind of lost confidence because, I'm learning as I go. And some of those have turned around, made a lot of money, but I was not participating, still tracking them here. Some of those are, just to name a few, Marathon Digital, ticker symbol MARA, as well as Unity Software. I've followed that one for quite a while. And, it's making a lot of big moves. And, I basically got out right around the bottom, took a small profit. And, that was also just part of, my managing risk and whatnot. And, I could have, made more money, but, I'm not jealous. I'm not feeling like I'm missing out or anything because I'm learning a lot here. And that's really what this is all about. And then since I said a few, I should name a third. And I would say SoundHound AI, ticker symbol SOUN. That one really took off. I put a video out on it. I think it's looking really good. Around the same time, I put out a video on BlackBerry. I think that's going to be really great, and I'm participating in it, so I'm excited about that one. But anyways, back to the thesis here. This other symbol is, to do not get greedy. And so, I have this plan outlined here for how I take profits. If I only have one contract, exit at 80%. Maybe it goes to, a 10x. But, just for me, as far as managing my risk and not, holding on too long or, whatnot, in case it does go south, taking profits at 80%. If I get two contracts, trim at 20 and then at 80, 3, 20, 80, 100. And then from there, I start to go back doing 10% and then 0% break even just to lower that risk in case there is another pullback. I can then add more. And if I get up to or more than 6 contracts, then I would trim at multiples of 100% profit. And my plan is to end every week with at most 20 positions, whether that's shares, whether that's options. Last week, I ended the week with 21 positions. This week, I was probably about 23 positions on Thursday, but I took some profits. I could have made more. I could have also just been holding for longer, but currently I am only in 20 positions, so looking good there. And if you haven't noticed, while I've been rambling, I do have this key up here just for, the stocks on the list. I try to keep it, to 20 tickers, but I have exceeded that. As you can see, this is probably going to be kind of an extensive video, but I do have a lot of done tracking symbols over there. Hand waves goodbye, just because it's too much for me to be going over. So I got to remove some of the ones that I either made money on or they just didn't do what I expected. So I'm not following them anymore. Fortunately, I haven't really taken any losses. Nothing notable. I think my biggest loss was $1, if not less. I have made money on a good amount of these, but that doesn't mean they're all going to make money. And as you can see, I am holding a good amount of them, but I am also just watching some and new ones that I'm beginning to track this week. One is going to be this ChargePoint $2.50 call that expires May 16th, as well as Intel, which is a $30 call. Oops, Ed's in the way. Intel, which is a $30 call that is expiring on June 20th. I am holding both of those now, hoping to add more if they dip more, but if not, I will be taking profits at 80%. So yeah, I am just going to dive into the tickers. I'm probably not going to edit this. Sorry about that in advance, but it's been a long day of work and I got to be at work tomorrow again. So I'm just trying to get this out to you guys as well as, just for myself so I'm organized for the week. But, to get this started, let's look at AMC. So this first one is the $8 call that expires January 17th. This one, for me, is getting a little too close for comfort, so I'm not in it. And I'm probably not going to be tracking it anymore next week unless things start to get exciting. This is one that I did hold previously. I made about $15 on it. And so, just the way that I manage risk, being, a little over a month away for that expiration, I am probably personally just not going to make the best decisions around that. I might, cut a loss, when I should hold for another day or so to see what happens, or, I would hold until it goes to zero. So this is one that is not for me, at least not anymore. But what we can see here, I did have a little position here, made some money on this big move up. Overall, the premium that is in blue, the average premium there, data that I get from Unusual Whales, has more or less just been coming down. The underlying stock price did see it form a bottom over here in, let's see, it looks like the beginning of October. October 9th, a low of 407, closing price somewhere around there. But that has come up some. But we did, of course, have an offering or a listing of more shares. So there was a little bit of dilution. Price did come down along with that premium. But what we can see is that open interest in green here has been going up. Even, following these spikes in volume, those spikes were followed by, increases in open interest. So that is good. If we do look at those spikes, they go up to almost and just over $200,000. So that is notable. And what we can see, so this is total premium here in blue, and then we have that implied volatility, or IV, in green. That has been going up, but it has pulled back some. And really, I think IV is best when it's below 80, and definitely, below 100. When it gets above 100, that is a little too much. And so, not as good to establish positions then, as far as I understand, as I am learning this. But yeah, there is that for AMC with the $8 expiration in January. And so the next one is AMC $8 call strike. That expires June 20th of 2025. So this is one that I am holding. As you can see, I've got, I've sold a few, two contracts, one at 30%, one at 80%. Almost got this one at 100%, which would have been at $1.07. On Thursday, we hit a high for that premium of 106. So I was a penny off, but no worries. I'll just continue to hold until that gets filled, and maybe I'll have an opportunity to get my average down to add to my position. My position is at an average of 53 cents. And so the low on Friday was 66 cents. So it'd still have to come down more for it to get to my average there where that red line is. And it does look like, let's see how many more shares in or contracts, I should say. I'm holding 3 contracts, so I would trim at 100, 200, and 300% profit. But, it's also quite possible, as plans do change, that I might trim this early. But I do feel pretty confident that AMC will be going up to, or at least towards, $8 a share by June. But of course, I could be wrong, and this contract may very well be expiring worthless. Things to note about this, though, I did just go over the data here in the last tab. What we can see with the premium here has actually been going up more notably than that January one, and that's probably just because of theta decay getting closer to expiration. So this is coming down towards zero, whereas the June expiration, plenty of time. So this has more or less followed the stocks trend of going up here. And what we can see in the volume, got this nice spike here, and that corresponds with about $60,000 in premium. And if we actually look at the list here, we can see it's about $63,000 in total premium traded on that day. However, what you might notice is the open interest came down a little bit following that spike. So that looks like net selling on that day. And this also, though, one of the things that I, is maybe not so great about this contract, just since it's, months out, it's just not as popular. Excuse me. It's just a little bit less data, a little bit less exciting, but, it works for me. I don't need the trades to be super flashy or anything like that. I like this one. I've been taking some profits on it. Almost took a little bit more, but I suspect I will get another opportunity to trim at these levels. And if I can't swing for 300% gain, that's fine. I'd be happy with a 2x or 100% gain on this one. And the next one, this is going to be the AMC $20 call expiring January 16th of 2026. So this one is a leap. And so I did something that, I kind of regret a little bit, but at the same time, I don't necessarily, because I was at work and I stuck to my plan, and I think it's good to do that. And so what I did is I, got out of my position at 80% profit. That was the plan. That happened, as we can see here, on Thursday the 5th. The high was 75 cents. I sold at 63, so I could have made, $12 more, but I'm happy to take about 28. And following that, though, we did pull back. And, on Friday, I got the news about the share offering and realized this is probably going to come down. And I had previously, the night before, placed a buy order at 55 cents, and I was at work and I was thinking, well, maybe I should adjust that to 50 cents just to get back into my position and, still having taken some profits. So, while 55 here, that's, a discount effectively from where I sold it at, taking about, let's see, is that $8 in profit before re-entering. But I was thinking, I should adjust that to 50 cents because I thought that it would be pulling back more. Like I said, I was at work. I decided to just leave it. I'm fine with that because this is one that I think will be making money. I do think that there will be a lot of volatility in AMC. Whether or not price gets up to $20 a share, I don't know. It doesn't really matter. I just think it needs to have, that volatility to bring it up, to bring the premium of this one up. But, a part of the reason why I bought back at 55 cents rather than at 35 cents, which was my initial position, is because I had just gotten one contract back here and I didn't add to it. I had opportunities to get, let's see, at Lowe's at 30 cents. It probably didn't get filled, but I could have gotten more lower than 35 cents. I didn't take advantage of the opportunity. And this is one that, I feel like I could swing for more than 80%, but I didn't do that. Now I have that opportunity to do that, considering that I did buy back my contract, and with the average being higher, I will have more opportunities to buy, like if it goes down to 41, which it did on Friday. But I just got the one contract on the day. I do have a plan to pick up another contract at 45 cents, but I don't have an order placed right now. It's in yellow. That means that, I'm just thinking about it. But looking at this number here, I should probably change that to green, place a buy order. But like I said, I haven't done it yet. But anyways, you can see my position here going from 35 cents spiking up to 55. And we might be seeing this pullback. Then I'll add more contracts and swing it. And so what we can see with the volume spike here, that corresponded with a premium spike of about $800,000, a little over that. If I scroll down, we can see the exact number. Let's see, where is it? It should stand out. $818,000, so quite a lot there. And following that, there wasn't a big sell-off in the open interest. However, it kind of bled, came down here. So, but this axis is the volume, so that comes down to 0. Whereas over here, this is, the open interest, and that ranges from 105,200 up to 106,100. So really, if I were to adjust this to, the baseline here being 0, that would effectively be flat going across. So the number of contracts that were purchased here have more or less been held. As you can see that the open interest has been going up since then. So, I feel really good about this one. I think it's going to be a moneymaker beyond 80%. And so that is why I did buy back. But, maybe that was a mistake, as I could have gotten that position at, I could have reestablished that position at 50 cents or 45, since the low was 41. And maybe on Monday, I could have just been patient and added that back at 35. But anyways, just a good lesson here. And, I will be happy to have multiple contracts. So I'm fine if it does come down to 35, 30, whatever it is. I am fine with that. But, could potentially be a good lesson on patience. And then so the next one here is going to be BlackBerry, ticker symbol BB. This is the $3 call expiring December 20th of 2024. This is one that is way too soon for me. I did not participate in it. Thought I'd just track it, but I'm probably going to remove it next week because it's, just a couple weeks away from now, getting a little too risky for me. But what you can see is that the underlying stock price in green has been going up, and the average price for that premium has more or less been going up, but it's kind of just been flat. Now, what we can also see is some spikes in volume here. This one corresponding with about, $23,000. Let's see, $22,574, just about 23. And that does correspond with the open interest going up. And we can also see, let's see, the IV, while that IV has been going up, it is still, right around 100. So it's not too crazy, but with that expiration date coming up, too close for comfort for me. So like I said, I'm not going to be participating in this, and I will likely be removing it next week. Let's see, going over the next one is, again, BlackBerry ticker symbol BB. I should note, too, I didn't do this for AMC, but I did just put out a video on AMC, so you can check that out. But I should probably go over the charts in these. I'm just tired, been a long day at work. But anyways, this is the BlackBerry ticker symbol BB, $3 call expiring January 17th. Again, a little too close for comfort for me. I did have a small position. I took profits at 30% rather than 80%, just because I recognize it's too close for comfort. I got to do with what I'm comfortable with, and just because I included this in a video doesn't mean that I need to follow through. Plans do change, and here they did. So I exited this one at 30%, and that was at 13 cents. I could have made more, but I was fine with that. Making money, it's only $3, so nothing too crazy. But I just wanted to get out of that. But this one, I think just this is one I'm really excited about. You got the AMC chart, so I'm just going to skip that and get over to the BlackBerry one. I did the video on it, so I'd recommend checking that out. If I go over to, let's see, I think I got to go over to the monthly time scale. Yeah, there's this orange line here, and we have, effectively been trading below it. So one might view that as, oh, this is bearish, it's broken, it's going to keep going lower. I actually think it's going to be going higher, and that we have found a bottom here. Maybe I'm wrong about that, but this does look like some nice consolidation here, potentially breaking out or getting to testing this downtrend here. This to me looks like it could be a bull flag, and I think this could be going up to around $3.40 or $4 up here, $3.85. So I feel pretty good about that. $3 call seems very reasonable. But this is just an expiration that's a little too close for comfort for me. See the underlying and the premium going up. Also see the open interest going up. Following these spikes, though, it hasn't really gone up too much. So yeah, this one just seems a little too risky for me, just because, maybe the timing's off. And so, maybe I would end up losing money on this. But a couple contracts, let's see, that I am holding with BlackBerry is the $3 call that expires in June. Just feel much more comfortable with that expiration. Looks like I'm holding two contracts. Bought both of them at 35 cents. I guess I was a little impatient and not waiting for, a dip to 30, which I could have had filled on the second. But, I'm happy to have two of these. And this right here, in green there, that means that, let's see, that I have a buy order placed at 30 cents. So, to get that average down. But if that doesn't fill, maybe I would want to buy more. And what we can see here is that, the underlying stock price has been going up. Although it's been consolidating here, effectively, forming like a bull flag here. And that premium has gone up, but then, kind of flattened as well. We see open interest got a nice spike here, which corresponded to a premium of over 40,000. So let's see, almost 42,000 in premium. And, the thing that I really like about this that makes me feel more comfortable, more confident in my trade is the IV is super low. The expiration is months and months out. So, I think this is going to be a real winner. But, of course, I could be wrong. And I'm just got to drink some water here. And just one second. Sorry about that. But yeah, so I'm going to switch over to the next one, which is, again, a $3 call for BlackBerry. This one's expiring January 16th of 2026. So again, a leap. This is one I was a little more aggressive on, but actually, I added at lower prices here at 68 cents, at 64 cents, and then again at 65. My average is 66 cents. And so I will be trimming at, 20%, 80%, and 100%. I'm sure it will go higher than 100%, but the whole plan with this is to not fall in love and to trim, to take profits and to move on to the next one. And, I'll probably still continue to track this, even if I do exit, just because, I think the setup's beautiful. And if I'm making the money, that's great. But if I'm not, I at least want to be learning, reinforcing the conviction that I have in these plays. I think this is a really good one. I think that it's going to pay out very nicely. But I, of course, could be wrong. And with this one, I don't have a buy order place, but I am interested to add at 50 cents. Although, depending on how the week goes, I may, bump that up to 60 cents or something. Who knows? Because, to be honest, I don't think 50 cents is going to get filled. So I'll probably want to adjust that, but I just haven't done it yet. And this looks like, really just the things that stand out to me looking at spike in volume. Okay, that is good. What happens to the open interest following that spike? It did look like it came down, but then following that, it's rebounded. So, I don't think that was terrible because net, the open interest has gone up. And that spike we can see over here, it was about $70,000. I'm just going to scroll down. So 69, almost $70,000. And again, IV is pretty low on this, so it seems pretty reasonable. And something that, people, somebody mentioned in a comment, I think I posted on X about BlackBerry, and they said, remind me what year it is again. And I think I said 1999, because if we look at the chart, go back to the monthly time frame here, this low over here was in 1999, and I included a GIF of Neo. And actually, since I've got the computer up here, what I should probably do is pull this up, and if I go to my profile, I think I should be able to search my profile for, let's see, I'm not sure how to do this exactly. Let's see, so from, let's see, dgen and then I can search for ticker symbol BB. Okay, yeah, so this one, and let's see, somebody, yeah, I don't know when I posted it. I thought maybe it's under replies. I don't know. Anyways, I don't want to take up your time looking at that stuff. But anyways, it was a GIF of Neo from The Matrix saying "whoa" right before flying. Actually, I don't think he said "whoa." It was right at the end though, right before he started flying. So I think that could be happening with BB, going back to the times of 1999, big run up there, even bigger run up over here. And so BlackBerry, they don't just, they didn't just make those phones. They actually do a lot with like cybersecurity stuff, AI, things like that. So I think this could be a very, very nice play. And so that's why I'm in it. But I'm not, in love with it, just interested to swing it. But anyways, one that I did swing actually a couple times before is going to be Celsius, ticker symbol CELH. This is the $50 call expiring March 21st. And so, I did swing it here when the premium went up some. It's been flat more or less. And this is one that, let's look over at the chart. I'm just not, I don't have too much sentimentality with it or anything, but I do think, there was a lot of talk about this being a falling wedge, it breaking out, then it came even lower. Maybe this is a bull flag now, maybe following this downside move and consolidation, maybe it's bearish. Yeah, I don't know. I feel like this is probably going to be breaking higher, but, in keeping to my 20 positions at the end of each week, I'm not in this one anymore. I don't plan on buying it. It's just because, I'm not in love with it, and I don't want to be in love with these. So, I'm probably just going to move along. But what we can see with this spike is that the beginning of November, somewhere around there, let's see if we look at the volume from this list here, around the beginning of November, we should see a big spike up to volume 1,000. Why isn't there? That should go up to 1,000, right? I'm not seeing, 971. I'm an idiot. Yeah, so there's a spike there that corresponds with 160,000. Following that, open interest has gone up, and IV has come down. So actually, maybe this is one that I don't want to get rid of. I want to continue tracking, and maybe I should consider adding. At what price, though? At what price? So I had my average here at 66. I'd say, maybe at 60. This is going to be, so that's good there. And so I'm just going to color yellow. So, oops, there you go, 60 cents. Because I think that this could be going higher, $106,000 premium on this spike. The open interest following that did shoot up and it's continued higher. IV following that drop has come down. IV is less than 80. So, I think this one actually looks really good. So I will probably continue to track this. So I'm just going to come back here and I am going to delete that hand wave because I should keep it. I will be removing some of those BB ones that I talked about as well as that first AMC one, just so you're aware. But yeah, coming back to actually crap. No, the reason why I don't want to track this, I'm an idiot. I am an idiot. The reason why I don't want to track this is because of that expiration date, March 21st. For me, I know it's months away. It's just a little too close for me. I'd probably get a little emotional. I don't know, though. I'm $60, I think it's kind of worth the risk. But, I could maybe lower the risk by going for a Celsius call that's further out. So this one was a $50 call. This one, $50 call over here. This one expires June. I should probably note why $50. Sorry, I'm kind of a mess this week. I've just been at work all day and I'm tired. 50, got it up here. I'd probably prefer it to be like 40. I think that's more reasonable, but just keeping that premium down. 50, just got to move towards that direction and then take profits at 80%. So no big deal there. But yeah, this one, same type of thing as the other one. Basically these graphs look the same. I don't have a position in this one. Premium following these spikes or corresponding with these spikes has been around, 50 to 60,000, so not as stand out as the March expiration. But following those spikes, we have seen the open interest continue up, so that's good. IV is, like I said, lower than 80, so that's not too bad. But this one, maybe it's behind me. I'll show you in a second. I guess I gotta copy a different format. So this is, let's see, 150, and I'm just going to color that yellow. As you can see, 150, that'd be a price that I'd consider adding, but also, I don't know that I necessarily need to be risking $150. So that's kind of why, maybe I'd be more interested in the March one. But yeah, I'm going to color those tabs yellow just because I should, be keeping my eyes on them. But then the next one on here, this is new. This is a ChargePoint call, $2.50 strike that expires May 16th. And so I am interested in ChargePoint now following their earnings call because I noticed that I think Max Payne last week was $1 a share, and it looked like it might be closing above $1.50, so closing contracts above Max Payne thought it would be good, but unfortunately closed on Friday at $1.31, below $1.50. So those contracts, $1.50, I talked about them a little bit, a number of contracts during the earnings call. But so for me, I feel like $2.50 is more appealing than, let's see, $1.50, just because, it's to swing, it's not to fall in love with. And if we look over at the ChargePoint chart, I kind of drew this doodle up during the live stream, I believe, for their earnings call. But yeah, I'm not really surprised. We got, bumped into some resistance here. We do have this gap here at 169. And so I was kind of talking about, ideally, price would go up like this, bump into that resistance, pull back, and then go higher. But maybe it doesn't. Let's see, ChargePoint $2.50. Coming up to here, that will be getting towards $2.50. So by May, I could see it happening, or if not, maybe it stops around $1.69, $1.50. But I don't need it to get in the money. I just need it to go towards getting in the money, and so that's fine. And yeah, this trend line was notable support here, notable resistance, and so I think that might be kind of tough to get back there. But I do think that we have kind of change the trajectory, and I feel like if we were dipping to around $1.25, that might be the new floor. I think that this could be going higher. So feeling good about that. But yeah, I mean, the $2.50 call, I just got one contract at 13 cents. I do have a buy place to get another one at 11 cents. Not risking a lot of money. It's just, 100 shares times 13 cents. So that's $13 for one of these contracts. And so if I swing this for 80%, I'm not making a ton of money, but I'm really just getting that practice down, getting that discipline and whatnot. And so what we can see here in the charts, the underlying stock price was coming down some, then, kind of, more or less flat though. Then now it looks like it might be going up. We did have the premium coming down. Now it looks like it could be going up. And we have seen some spikes in volume that were followed by increases in open interest. So that's looking pretty good. But if we do look at the total premium behind these spikes, it's less than $10,000. So one YOLO, as far as Wall Street Bets defines it, is $10,000. So this isn't even one DGen YOLOing on this. So, pretty small, but I think that it could be, resulting in 80% swing, if not more. So yeah, I'm kind of hoping that this gets filled 11 cents. But if not, that's fine. I am not risking very much, and I am learning as I go. So yeah, there is that. So the next one on here is going to be the FSLY $10 call. This one's expiring June 20th, as usual. I've swung this one previously multiple times, didn't trade it at all last week. I have taken, 100% profit on one contract, and then, all of these on the way up did break even, lost a little bit there, a little bit disappointing, but because, I could have made a lot more with it, but, that's fine. I'm learning how to manage this. And this one, beautiful setup. I had, I had gone over this during a ticker request live stream Sundays at 9 p.m. Eastern. I drew this cup and handle. First time kind of drawing, I kind of fumbled with it. And nice cup and handle. Got a fake out break here. Somebody on X was tweeting at me that, first a 40% drop and then 40% up. And, it's like, well, I was just keeping an eye on 631. That's why I got the purple line there. And also noted that the 786 is at 621. So it seemed like a valid dip. And faces got ripped off. So it was great. I took profits a little earlier than I could have. I did not expect it to go up to and beyond $10 so fast. I took profits at a maximum of $1.24, so $124 per contract. And if I would have held that was a 2x for me. I could have turned that into a 4x and beyond, because the high on Friday was $3. So, it sucks. I could have made more money, but at the same time, I identified a pattern that stood out. I recognized that when it looked like it was breaking down, it was potentially coming into a technical level. It was, and that was a great discount. And so I got this already drawn up here, just moving it up to there. 75% move just for buying shares from here, which I did not do. But I made 100% from that one contract. So I feel pretty good about that, but I'm probably not going to cover this anymore because, I've fallen in love with it a little bit, and I just don't want to get too attached, because then maybe I would FOMO in up here and then it would come down. I'm actually going to adjust this axis here because let's see, I need to adjust that high point because, yep, it's gone beyond that. But yeah, I mean, this was a successful trade for me. I was disciplined. I made money. I have moved on. I'm over it. So now let's move on to the next one, which is FuboTV, ticker symbol FUBO, $2 call expiring May 16th. And this is one that I did swing. I ended up getting out of my position, not at 80%, but at 20%, just because, I'm not in love with it. So, I just wanted to move on. I sold two more contracts, I should say, at 36 cents. I could have made, on that day a little bit more, but it wouldn't have been 80%. And I didn't want to close the another week with more than 20 positions. So I'm fine with that. And actually that AMC call that I bought back, that put me at 20. But I was trimming this because, exiting this one because I was just spread a little too thin. But yeah, let's look over at the chart. I'm sure that the FuboTV is looking pretty good. But yeah, I mean, it's just, for me, it's like here, bearish engulfing candle. I'm just going to delete this box here. So that doesn't look so good. Maybe it's a fake out. But yeah, there's some sirens there. Hopefully they're not too distracting. But yeah, I mean, this is just one I'm not super compelled by it. So it's like, well, I'll just move on to the other ones. And what we can see though is open interest has just been going up. We've been seeing all of these spikes in volume, which have corresponded with 25,000. I mean, it's not a huge amount of money. So yeah, IV is right around 100. And yeah, so I'm just going to move on. Probably won't be covering this one again, but maybe I will. Maybe something stands out. I'll probably track these next week, but I probably just won't include all of them in next week's video. It's just too much for me to go over. And then so the next one is the GameStop $50 call that expires June 20th. And this one, I'm not participating in this one. I have a different GameStop call that I did buy the dip on. And, I'm feeling pretty good about that one. But for this one, what we can see is that the stock price and the premium for these contracts has been going up, but we did just recently see a pullback. We've seen some nice spikes in volume that have corresponded with over 80,000 here, over 120,000 for these two spikes. So that is, getting into some big money more than just, a simple little YOLO or a few YOLOs. That's, I think, when you get into the 10 YOLOs, it's a little bit more than that. So something to be paying attention to. But yeah, with this, of course, we got the Roaring Kitty tweet out on Thursday, but then we did see unfortunately, a sell-off for following that. It got rejected from this level here. Looks like maybe a little bit of a dragonfly doji here. So, I think that this could be definitely going higher. Earnings coming up, though, it is risky. But this one I did not buy. The reason being that the price for the contracts is just too high. And so I did not want to partake in this one, which is why I decided to buy the $80 call. This one expires also June 20th. And so, following the big move on Thursday, I was thinking, I will actually wait. I guess I bought this on Monday following last week's video. Yeah, okay, so I was just thinking, well, maybe it could come down to around 350. Almost perfectly bought the dip there, but then it did come down lower. Looks like there's no data here. So there weren't any contracts traded on that day on the 4th. Yeah, I think it's just because it's well out of the money and far into the future. So it's not as popular of a contract. But right now, it looks like, I am more or less in the green with this, but that could turn around. My plan is to swing it for 80%, which would be super nice. 80% of $350. I'll take it. And for this one, I don't have an order placed, but I would consider adding at $3. And we haven't dipped that low. The lowest we've gotten following my initial buy was $3.30. And yeah, I mean, I guess it went up to as high as $5 a contract on Friday. So yeah, that's pretty nice. And I should probably do the math on it. I probably already have and have the order placed to sell at 80%. But yeah, I've got about 6 months or so for this, and yeah, feeling good about it. And these, I should note, spikes in volume. This one corresponded with an increase in open interest, whereas this one was a sell-off. So that's kind of discouraging, disappointing. Also, not that much as far as the open interest. This is 600 coming down to 0. So it's right around open interest of 250. So not that huge. Implied volatility is pretty high, so this is a risky one. And these spikes in volumes corresponded with spikes in premium of 140 and about 100,000. So pretty big there. But yeah, we'll just have to see. This is one I don't plan on aggressively buying the dip if it does go lower than my average of 350. I'm just going to see what happens. But I think that this one could be a nice winner. So I am excited about it. And the next one on the list is going to be Hycroft Mining. This is one, I feel like I may end up regretting. Currently, it looks like I have 6 contracts would be taking profits up to 200%. And my average is 57 cents. I just haven't been buying too aggressively. I would consider, I guess I do have a buy order placed at 35 cents. We dipped to that on Wednesday. But there was no contracts exchanged on Thursday, and the low, high, and average on Friday, just one contract being traded, was 40 cents. And so with this, we can see that the price in green has had some spikes, but it's generally been coming down along with that premium. Along with my position, I've just been slowly trying to get the average down, but not too aggressively. See spikes in volume corresponding with maximum of about, not even $4,000. So this is pretty small. Open interest, though, has been going up more or less following these spikes. Not this one, though, but following that dip, it has risen back up. So I think that's good. The implied volatility is around 100, so it's a little bit high. And if we look over at the chart, let's see, Hycroft Mining. My thoughts are basically that I think it's going to come down to this uptrend and then bounce. And so I think that, it might come down a little bit more, and that's when I would get this 35-cent fill, but maybe I want to be more aggressive and get a fill at 40 cents. We'll have to see what happens on Monday. But yeah, I think that this is a fairly speculative one. It did not really, do the inverse head and shoulders measured move that I was thinking it might do. And so, yeah, now it's just been bleeding, but still putting in higher lows. And even if it does put in a lower low over here, maybe that's sweeping the lows, faking people out. And I guess, one thing that we can do is if I do a Fibonacci retracement from the low here to the high here, the 786 comes down to around 216. So actually, I think this looks, got multiple levels, and that's what you want. You got this trend line coming into that, coming into this, and so maybe I want to, I just need to copy the format. So I get a 40 over there, but I'm going to color this yellow because I don't have an order placed and I'm going to think about it. But it might be a good way to get my average down. It's the last buy that I did get filled was 45 cents. That was on Monday of that past week. And yeah, so let's see. The next one on here, I am super excited about this one. This is the Intel, ticker symbol INTC, $30 call expiring June 20th. And so let's see. The reason why I was initially interested in this is, I'm just going to click on this tweet from Mr. Chart Norris. This was from, let's see, November 26th. He's posting daily chart. This is your chart to trade. So he just seems pretty confident in this. And but then if I go back to here, click on this one, I basically commented on he has been, struggling with this because he's been, the charts, it's basically, let's see, what did he have over here? It was like this. He's expecting it to, go up like that. And it, just broke down. And so I just commented on his comment. He was saying, Intel, you are the worst thing happening to humanity. And, I think it's funny. He's just having some fun. And so I had mentioned, I had wanted to partake, but had to sit on the sidelines because I had too many positions. But then I have established a small position, one contract so far. And so far, 19,220 seems like strong support for Intel with the 786 from September 10th low. I'll show you this in a second. And another 786, which is in yellow here. I don't think we're coming down to that. And so this is kind of a historical Fibonacci, whereas this one is, the recent one going from the low here to the high here, coming into that. So I feel like it's going to find support between 19 and 20. I don't think it's going to come down to 786 because I have confidence in his analysis that I just think that he maybe was a little early. And anyway, so this seems like the load zone, in my opinion, with that gap up at 29 cents or $29 up here, as you can see. And so if I go over to the chart, we can see that gap over here. If I go over this 786 in light blue, we can see where that's retraced from. And then if I look at this one, we can't see it because it's pretty historical. And I think I might actually have to switch over to the weekly to go over that. And so that is based on, the lows from 2009 up to the highs from, 2021. And so that 786 was, I'm just going to switch back over to the daily, was recently tested with a double bottom there. This looks like it was sweeping the lows because it did put in a lower low before going higher. And so if this is to be bullish, I would think that at this point, having swept the lows over here, it would not do that again. It would put in a higher low. And this is just, a great dip buying opportunity. But of course, I could be wrong. Mr. Chart Norris could be wrong. And so take that all with a grain of salt. But what I did is I got one contract at, $1, just, round number, thinking it's easy. And, got that on Thursday. It came down to 90 cents. I could have gotten another one, but I am going to wait for 80 cents. So I get my average to 90 cents. And I do have an order placed there, but maybe it doesn't get filled. What we can see, since I've been tracking it since, throughout from the beginning of November, looks like the price has more or less been flat, coming down a little bit. More recently, it has been coming down, as you can see here, more or less. Let's see, from the beginning of November, it's more or less been flat, then coming down more. And the premium has just been coming down, so I added. And, hopefully I can get more than just one. But if not 80%, $80, I'll take it. With a spike in volume, we can see that the open interest went up. So I think that's great. The spike in volume over here, looking at the total premium, that spike in volume represents total premium of $2 million. So that is not nothing. We also see the IV is super low. So, yeah, I'm excited about this one. I think it's just been a nice example of being patient and, sitting on the sidelines, but not having FOMO, waiting and then pouncing. And so that is what I've done. We'll have to see if this prints. I think it will. I feel pretty confident about it. All right, and so the next one on here is going to be Luminar Technologies, ticker symbol LAZR. We've got a call and a put. So the call here, $15 strike, expiring May 16th, hasn't had much action just because they recently did a reverse split. So not much going on here. And so I just kind of wanted to evaluate, could there be money to be made having, perhaps formed a bottom if this is, the underlying stock price that closes here right around 8. Or if this is going to continue lower. I suspect it will go lower, but I just kind of wanted to track this call. And, it has picked up some open interest over the past week, but not that much. So this is very, very small, too speculative, but I'm just curious to track it. The other one is the $6 put. This is also expiring May 16th. Nothing going on here. And so this is one that I personally would not want to buy because I want to make sure that there's somebody to sell to. If there's nobody to sell to, then I'm not going to make any money with it. So this is too light for me, too light to be of interest. If we look over at the chart, yeah, I mean, I had done this video on it potentially coming down to 611. I personally don't think it's going to come down to 611, or I don't think it's going to come down to $6 a share, because I think too many people will be watching that. They'll get left behind. I do think that it will break $7 a share, as we did hit a low on Friday of 744, but did bounce closing at 781. But yeah, I mean, it'll be interesting to track that, see where it takes us. So I'm just going to slide this over. So we've got all of the other tickers here, although you can't see them all behind me. The next one, this is Marathon Digital, ticker symbol MARA, $35 call expiring March 21st. And yeah, a little too close for comfort as far as that expiration date goes for me. But I did, kind of follow up on this based on this guy, Talati Tapan, who is Volatility on X. I'll just pull up his post here. I recommend following him. He does a lot of great analysis. He was suggesting that this would be breaking out when price was, below $34, below $30, it looks like. And yeah, he's been like spot on with this one. And as you can see, the stock price has gone up as well as the premium. And so going back to the 8th, if I scroll down here, just making sure that's above Ed's head, we can see that the premium for the 8th, the low to the high, so let's say the high, bought on that day, 162, but maybe you saw his tweet after market close, so you wait, and you see, oh crap, well, it's trading around 430, or, it's going up. Maybe I'll, see it, it's looking like it's going up. Maybe place a buy order at 162, doesn't fill. But even, let's say, buy in at that high following that day, 430. Do you think that price went up or down for this premium? 430, could have, gotten, bought the dips here. But yeah, 430 went up to a high of 741, 740 over here. And, even with the high on a Friday, which wasn't as high as these, that's making some money. So I just think that this has been great to follow. But, it's one that, I got left behind on. So I don't want to be chasing. I don't want to FOMO or anything like that. Spikes in volume correspond with spikes in premium. This one, it's lower over here. That's $2 million. This spike over here, that represented, $3.5 million. So quite a lot of money there with that open interest going up, although it has pulled back a little bit following this one. IV, that's just too high. So this is one that's, not for me, but I am excited for anyone who's holding this, rather than getting jealous, rather than FOMOing. This is about celebrating wins. And, so I kind of drew this doodle thinking it might do something like that. And, it went up to this level way faster than I expected, pulled back way more dramatically. I should have, got in here and then ridden it up, but I didn't. And, that's fine. It's not about regret. It's not about being upset or anything. It's only about being happy. So I'm happy for those who have made money on this. No idea where it's going to go from here. And, I'm probably going to stop tracking it just because these videos take me too much time and I'm tired. And so the next one on here is Moderna, ticker symbol MRNA, $60 strike call that expires April 17th. And so this one, basically did not go the way that I was expecting it to. I did not establish a position in it, but I just kind of wanted to follow it, which was based on a video that Gareth Soloway put out, or based on from one of his game plans, based on some analysis that he was doing with mRNA. And I thought I'd, throw it up on my chart and see where it takes us. And so basically it was, I think right around here. And he's saying, well, that's like kind of about the midpoint of the channel. He's thinking that it's probably going to come down to around 32 or 30. I have got alerts there. So I thought I'd track it. But it looks like it went to the top side. Maybe it's getting rejected now. So actually maybe a put would be something interesting to look into at this. But, it could also be breaking out. And so I'm actually just going to note this MRNA put. Maybe I'll include something in next week's video, maybe not. Maybe I'll keep tracking this one. But yeah, I mean, it looks like it's, don't want to be buying right here. It could be a topping signal, kind of like double top with those wicks there. So maybe this will be coming down to 32. So yeah, maybe I want to keep tracking it, but maybe I want to track a put as well. And yeah, we can see spikes in volume correspond with like $100,000+ in premium, open interest increasing. So this is looking good. So I mean, it may just very well be, breaking out from this channel. So maybe a terrible time to be buying a put, but maybe not. IV does look, right around 80, so not too bad there. But yeah, I'm not in it, and I don't plan on getting into it until, something really stands out. Nothing, no real signals for me. And so the next one, I'm super excited about this one. This is the NEO $8 call expiring June 20th. This is like one of the OG contracts that I was tracking, this and an AMC one at the beginning. And yeah, I have gone heavier in this than I would have normally intended. It looks like I got more than one per day last week. Didn't get any on Thursday. Took a little bit of a break after being pretty aggressive over here. On Monday, I got 2 fills, one at 35 cents, one at 34 cents. And then it looked like it was breaking out. So I was kind of chasing a little bit, but still, getting my average down. 41, 45, 44, and 42 cents. Spent $172 that day. The following day just did 40 cents and then did 40 cents again on Friday. I do have a buy order placed for 38 cents and 35 cents. And so right now, to be honest, I don't know how many of these contracts I have. I keep track of, the percentages here that I would, go in multiples of. And, for me, I'd be happy with a 400% swing. So I would trim 1, 2, 3, 4, 5, 6, 7, 8, and then 9, 10, 11, 12, 13, 14, 1, 2, 3, 4, 5, 6. So I'd sell 7, at this 400%. And that would just be an excellent trade. Could be it is very risky because I've got so much money in this now, so many contracts, or at least so much for me and my comfort in getting into options. But, the nice thing about like dollar cost averaging into it is I have really just, my position has followed the stock and the premium down. There are a number of reasons why I think that this is right around a bottom. One is this is a link to Gareth Soloway's game plan from, I believe, Thursday morning. He talks about the Hang Seng, which is, I believe, the Chinese stock market, and the index of the Chinese stock market. And that he's talking about it getting close to finding support, like recently did when we saw the price of Chinese stocks going up over here. And so, I think that we might be seeing some more volatile moves to the upside like we did over here. And so, I'm just trying to get more aggressive with this because I have a lot of confidence in it, but it may take some time to play out. Always takes longer than we expect. But I believe I had posted this maybe on the channel, definitely on X, I believe. But this looks like, a nice little falling wedge that potentially we've broken out of, but, there aren't too many touch points on this downtrend. But it seemed like, if I were to, move this over to there, we definitely broke out. And yeah, actually, that's kind of compelling. Got rejected here, got rejected again, so that seems significant. And then once we did break out, we got a retest, and now it's moving higher. But I could also, see it as being a downtrend like this, where we just broke out and now it's maybe forming a little bit of a bull flag, or maybe we get a retest down to here, sweeping the lows for people who got a little too ahead of themselves, a little too confident, and then it rips faces off heading up towards $8 a share. So yeah, I'm really excited about this. I think it's just going to be a real winner. I think that this is going to be like my best trade as far as just having a thesis and following through with it. So I'm really excited about it, and I'm excited to add more aggressively, as I do have 2 buy orders already placed. But yeah, we'll have to see. What we can see though, and I think what's really giving me confidence, I've talked about this pretty much every week, is this spike in volume corresponds with a total premium of about $250,000. The open interest following that has just gone up more or less. And yeah, the IV is still pretty low. So yeah, I mean, I feel like we're very, very close to, if not right around the bottom before, a rip your face off rally. So I'm stoked about this one. I think it's going to print. Nobody's talking about it. And so, I'm a little early, of course, but I think it's all there. So I'm just stoked about it. And yeah, but we'll have to see. And so the next one is the Plug Power, ticker symbol PLUG, $3 call expiring June 20th. And this is one that I do have a position in. And before I get into this stuff here, I'm just going to go over to the chart. This is one that, has been very frustrating, whether shareholders or, trying to do options, whatever, because it's just been hanging out below this level. I thought this was like an inverse head and shoulders, and we've just been hanging out below. Got a fake out break above, and then it's just been residing around here. And then it's like, is this getting rejected from this uptrend, from this level here, 242? Closed the week below 250, hit a high on Friday of 258. So, I think with options expiration, there's something there. But yeah, I mean, and also maybe this is a double top here. So I'm a little bit antsy about this at this point, to be honest. I do have some shares. I do have the calls. But I'm kind of debating, I think I'll probably trim some of my shares to be more comfortable with the contracts. I don't think I have too many. Actually, I guess I do. I've got 1, 2, 3, 4, 5, 6, 7 contracts. And yeah, but I mean, I don't have tons of money. My average is 36 cents. And I actually don't have a buy order placed at 25 cents, but that's what I would consider. But since we did have a pretty big move up in the price, with this, let's see, what percentage move was that? 15% on the 5th. So yeah, pretty big move there. And so with that, premium's gone up. As you can see, the low on Friday was 43 cents. So I don't think my 25-cent order would get filled if I were to place it, as we haven't really seen, 25 cents in the list here. So, that's probably not going to fill, but, I'm fine with that. I mean, I'm fine to just wait, fine to, if it doesn't hit down to 25, or if I don't, I haven't placed an order yet, but yeah, I mean, I'm not getting too crazy because maybe it gets rejected again. But what we can see is that, this has been like kind of the second big move up. This one we got rug pulled, it looks like. And, I was, I could have taken profits then, it looks like, but I didn't. Dang it. Yeah, so, I mean, back here at 48 cents, following, went up to 60. So I could have taken profits there. Then here I got my average down to 44. And yep, came up to 60. I could have taken profits. But yeah, now I'm not holding the bag because my average is 36 cents. The low is 43. I have been trimming. Actually, I was holding 7 contracts, but I've sold 3. I'm holding 4. That's what that means. My profits haven't been huge, but my break even was positive, so that's nice. Fees sometimes make them lower, but I think also just the average position size that I had, the odd numbers that I was buying it at, made it so there was a slight positive there. But what we can see here, spikes in volume. This one did not really correspond with a notable spike in premium. This one over here, yes, but again, it's like not even 2 degens YOLOing, so nothing too crazy. And following that, it looks like we did see a little bit of a pullback in the open interest, but generally it's just been going up. But again, it's not like a super huge stock or anything, so good to take it with a grain of salt. But yeah, I mean, this one, yeah, I think that I guess what I should say, this is what I was planning on talking about. I was thinking about, I have 12-hour shifts at work. So at the beginning of it, I was thinking about what I'd talk about with this. And then by now I've forgotten. And so with plug, what I'd like to see is it just consolidate up here, form a bull flag. And yeah, so I'm just going to draw what I'd like to see. So I like to see it form a flag like that. And I'll just make that white. Actually, maybe I should make that a different color because white could be interpreted as a white flag. And no, I don't want that. I'll do it, my favorite, that light soothing blue. So I like to see a flag formed there before a break above, 261. So yeah, I mean, if this does consolidate here, then it's like, oh, maybe I want to load, maybe even get my position average to be higher because I think it'd be going higher. But yeah, just hanging out with it, nothing too crazy. Rivian, this is one. A nice little lesson with it, as you might, I guess before I get into what I did, this is the Rivian $15 call expiring June 20th. I have shares of Rivian as well as these contracts, but as you can see, I have sold out of them. I almost waited for 100%, but on Thursday I got spooked a little bit. I sold at $200, took $200 out of it, partly because I had too many positions, also because I saw something that made me think, well, it's kind of seems like it might be 50-50. And, I'd rather just take the $200 off the table, trim my positions down to just have 20. And yeah, but if I would have held, I believe my 100% from 108 would have been 216. And so I would have made that 100% had I just held on to it for another day. But, it is what it is. And I think it's better to be exercising caution than to be recklessly hoping for an order to be filled. And so what we can see is, this is just looking really good going up. Looks like the bottom is in over here. Nice spike in volume over here, which I did post to the channel about this. That spike in volume represented more than $1 million in premium. Following that, the open interest has been going up. So this just looks great. But, it's all about time and all of that and stuff. So I, decided to exit my contracts, still holding shares, and with those shares I am trimming out. But, this is perhaps not very exciting. But one thing that I did with Tesla is I bought the dip at a technical level, just one share. My average is $185 with Tesla. I don't ever plan on selling that share. It's just one share, but it's, more than like $10. So, I'm just going to hopefully hang on to that forever. And so I kind of want to do something similar with Rivian, but it's much cheaper per share. I think right now I have 14 shares, very small position, but I'm just trimming as it goes up, and then I will not sell my last share. I'm just going to hold that one forever. If it comes below my average or, to a level I think it's going to bounce at, then I'll start adding again. But yeah, for now it's just trimming. And so anyways, stopping to ramble about all of that. The reason why I decided to sell is because of this tweet from Mr. Chart Norris. He posted, Rivian, zoom in and see the target is at 1292. Target hit, we good. He posted this a while ago, and I did not get out of my position then for my contracts. And so I kind of regretted that, and that was from November 13th. That's not actually the one that I wanted to go to. I wanted to go to this one, which was a retweet of mine of his, or me posting a retweet of his. And so he said, Rivian weekly chart. And this just reminded me of that previous tweet about it hitting 1292. I didn't take profits then back there. And looking at his chart, it looks like there's this moving average that it's bumping into. And I kind of noticed that looks like maybe that's a hanging man candle, which is a hammer candle, but following an up move could suggest reversal. And, the week wasn't over, but it just seemed like with that moving average there, it seemed like, it's potentially a good time to be taking profits. And so what I wrote is, looks like a hanging man below moving average. and trend line going back to September 2022 high. So I'm looking at that and saying, peace out. And if I do look over at the Rivian chart, we actually, broke out of that. So if I do switch over to the weekly, which is what he was talking about, that could, be a rejection. It could end up being a rejection and pulling back, maybe to test this purple downtrend as support. So, we'll have to see. Big wick to the top side, so maybe there is going to be a rejection there. But it does look like it broke out from, this is what I was tracking, not the moving average that he had, but this, downtrend going from the high of September 2022, tested over here, tested almost fake out, breakout here, and maybe this is going to break out and launch. If it does, I got shares. If it doesn't, if it pulls back, I could probably, re-enter that contract position because yeah, I like the stock and I'm enjoying swinging these contracts, and Rivian's an easy one for me to hold because I have a lot of confidence in them. So yeah, I think this is just a nice example of, this person's posting something that could suggest something bearish, and actually looking at my chart, it kind of suggests the same thing, maybe a little bit, on the borderline. And I took the risk off the table and I could have made more money. But for every time that you do this, I feel like every time that you then leave it on the table, the opposite happens and it ends up pulling back. So, I'm glad, I made money on this. I made over $200 trading this contract. So I'm happy about that. No complaints there at all. But anyways, the next one on here is the Rumble, ticker symbol RUM, $15 call expiring June 20th. And this one, as you can see, the stock price has kind of just been hanging out around here, but it has started to go up along with the premium has been going up. With these spikes in volume, we have seen increases in the open interest, so that's good. And these spikes in volume are representing, $450,000 here, and this one $300,000. So that's actually looking pretty good. So I'm feeling good about this. IV though is too high, around 130. So I would not want to be entering. And yeah, it's like, putting almost $200 on the table, 150 to risk it. And so I'm just not that interested in it. And considering the fact that this video is on YouTube and or X, wherever you're watching it, it's not on Rumble. And so I just don't really have too much conviction in that business as, its core business, but its ventures into coffee, its ventures into Bitcoin, all seem very interesting. But it just seems like too much of a copy and paste of YouTube, and I feel like X is already kind of doing that, but in a different way that's a little bit more intriguing. But yeah, 20.5% up on Friday. So what am I talking about? This is looking, could be putting in some top-end signals, but this momentum, is probably going to continue higher. So this is one that I missed, and I'm fine with that. And speaking of ones that I missed, SoFi, definitely learned some good lessons with this. I've got 2 puts on here, not in them, probably not going to get in them, but just kind of curious to track them. So this is the $10 put expiring June 20th. I don't really look at puts too often, so it is interesting to look at the data here because it is different, than looking at a call. You would normally see with a call these lines moving together. Here they're moving, mirror images of each other, with the stock price going up and the premium going down. And with these spikes in volume, we can see that they correspond with $60,000, so 6 degens. It's a herd of manatees munching on the seagrass, so not following a blue whale or anything. So nothing too crazy. This is probably just people getting to, being too early to short or to buy puts on the stock. As we do see, open interest. It's kind of flat, but going up a little bit. But let's see, IV is below 80. But just looking over at the chart, this is one that, I saw this, there was a gap down here at, I believe, 603, came down to 601, and I was then waiting for this gap at 541. I got left behind, but that's fine, because I wasn't, I'm trying to get better at swing trading, not diamond handing. And so going from 6 to, 16. This says, let's see, are there topping signals? Well, actually, this big wick to the downside being bought up. I don't think the top is in just yet. But what we can see, this is just higher highs. So to see bearish divergence, we'd want to see a lower high in the RSI. And these have more or less just been higher highs or flat. So nothing too crazy there. So I think that this is probably going to continue to rally, maybe up to 18. And so maybe that would be an intriguing time to buy put, but then, maybe not. So yeah, I'm just kind of curious, just trying to learn more to track in these. And I do have a note up here that, I'd be, I guess, interested to buy this at 40 cents. The low over the past week was 48 cents, but not low enough. I think that the stock price could be going higher, but maybe I miss it. I'm fine with that though. Looking over here at, this is the other SoFi one, a $14 put expiring June 20th. And, similar stuff, this pattern looking different than the other one. It looks like it's a newer contract, doesn't go back as far in time. Spikes in volume correspond with spikes in premium going up to almost 90,000. It looks like this was 87.569 thousand. And we have open interest steadily increasing. And the IV, again, is pretty low. So maybe this one, would be interesting to consider getting at, $1. But considering that the premium is much higher than that, I don't foresee myself getting into it. But I do think that $14 is a much more reasonable level for it to be pulling back to. That is, let's see, it's a Fibonacci extension. So where is that? Let's see, get that whole picture in there. Going from the lows over here, the end of 2022, it looks like, up to the highs over here, kind of roughly drawn, it looks like. But right around 14. So, I could see it pulling back to that, but perhaps it gets up to 18 first. So good to wait. And so I'm not planning on getting into this. I'm just kind of watching, observing, learning, whatnot. So hopefully this is, useful for you guys. The next one on here is SoundHound AI, ticker symbol SOUN. I did put out a video on this on the 26th talking about this, potentially ripping some faces off. And as we can see, this was the 27th. Here's the 26th. 25th, I guess it came out on a Sunday maybe. I'm not sure which day the 26th was. But the stock price has gone up. The premium has gone up. And we can see that there have been spikes in volume that corresponded with premium in the hundreds of thousands. Premium in these volume buys, or maybe, because this volume actually came down, but premium has gone up. Price is going up. This is probably going to keep going, but it's one that I missed. I am not of the caliber to be able to buy a contract at $500. So this is one I'm going to be sitting out on the sidelines for, but I'm just proud of that video because, I made a video before a big move, suggesting a big move could happen, and that's exactly what happened. I'm more interested to make videos like that. Even if they don't get a lot of views, it just adds more value. I feel like for viewers, I'm not just putting out whatever anybody wants, but I'm actually posting stuff that is, some nice setups, and it gives me more confidence in my analysis, my theses, developing them. And so, yeah, I'm really happy about this one. I'm really happy for those who are making money in it. I'm not participating in it. But yeah, it just looks great. And so the chart over here, man, wow. Yeah, so I said $13 call. It's already in the money, man. That's crazy. But, with that being said, I could see this pulling back to right around $10, tested as support before continuing higher. So maybe there's some more opportunities in the future with this one. But yeah, going from, let's see, premium of like $1 up to, damn. Yeah, so I posted that on the 26th, which was over here. And I first started talking about it on the 24th. So let's say, yeah, I mean, it was bought around the high on the 27th at $1. Dang, that's a 6x, almost a 6x right there. So yeah, I'm really proud about this one. I hope that it was helpful for you guys. And yeah, I may not track it next week just because this video is hour and a half almost shorter than I usually am with them. But I'm just tired and I got to go to work tomorrow. So, but yeah, congrats to those if you made money with it. I'm happy for you. And this next one here is Tilray. I actually wanted to do a video on this on yesterday, but I just didn't have enough time or energy because I work, Friday, Saturday, Sunday, 12-hour shifts. So I was just exhausted doing that AMC video. But anyways, this is the Tilray $2 call expiring June 20th. This is one that, it looks like, I have been accumulating based on a thesis that, I'll go over here. Which is that, I was going over it around earnings here. I was long on it. I was wrong. But then I suggested, well, I think that there's this falling wedge. And I think that because we did see this dip to 145, that it could be coming down to 142, just considering that that's 1.420. It's fun. And yeah, I thought price might be coming down to there. I did not foresee it breaking down below that level. But what I see here potentially is a double bottom respecting this 786 from that Fibonacci extension there. And yeah, I think that while we did put in a lower low here, that's sweeping the lows here for those who, see this as this is the bullish falling wedge. Oh crap, we've broken below it. This is bearish, then we get rejected here. This is super bearish. And, this is just going to keep going down. And so now people just see it, oh, well, lost all faith, all hope, conviction, whatnot. But this has been respecting the 786 there at 127, hit a low of 126, but the lowest close has been 128, which we closed out on Friday, so it doesn't look that great. But I feel like this could very well be the bottom. And if not, going down to 112 is the next stop on the Fibonacci extension here. So yeah, I mean, I feel like, I have a bullish bias with this one. I don't hold any shares. I do have the contract though. But again, it's a cheap contract, so I'm not too worried about it. But I'm kind of viewing this as being a double bottom and that this could be heading up to $2 a share to fill that gap. And so that's my thesis. It's not changing until we really start to see some closes below 126, multiple closes below 126. We haven't seen that yet, so I feel good about this. Been accumulating here. It's been pretty boring. I did take profits at 10 and 20%. Didn't have to do break even. I do have 3 contracts I'm still holding that I'd trim at 80, 100, and 200%. But I would like to add more. I have had this order placed for a buy at 14 cents, but the lows that we've been hitting has been 15 cents. So maybe, maybe I want to change that to 15 cents as I did take some profit. So I took some risk off the table. Now I can put some risk back on the table. But, I could see it as breaking down. So maybe I don't want to be too aggressive with it. So 3 contracts, risking $60. Maybe I need to keep the formatting. Maybe I want to do one at 15 cents to consider. So maybe I'll do that before the start of trading on Monday. But what we can see in the data here, stock prices come down, premium prices come down. We see that there are all these little spikes in volume. They don't correspond with too much. They correspond with degens buying, YOLOing $10,000 in premium on these calls. And we see the open interest steadily increasing and the implied volatility still below 100. So yeah, I mean, I probably do want to just place a buy order at 15 cents, but I haven't yet. And also too, I think it's important to note just because the low is 15 cents doesn't necessarily mean the order will get filled. So, excuse me, good to consider that. But yeah, I mean, I think that this one will do well. I think that people are in despair, and I think that when there's blood in the street, that's when you want to feast. So I think this is one to feast on. Yeah, so the next one here is the Unity Software ticker symbol U, $30 call expiring June 30th. I was previously tracking, and I previously had I think $45 call that expired in January. I got a little antsy about it. I took some profits, but like close to the bottom. I had entered at a good time, and probably, I took profits when the stock price was going up here. But yeah, I mean, or maybe it was when it was going up here. I'm not exactly sure. It was probably over here. It's been at least a couple weeks. But yeah, I mean, I've been tracking Unity software since like back in June, back before it really got a lot of attention on social media. And, it's just not one to really get too much attention. And yeah, I was posting about it before the recent moves up. And, while it would have been nice to have gotten some, I don't know, some feedback that gave me more confidence. Instead, I kind of didn't really hear anything back from people I was tweeting at. And, it's totally fine. Nothing had really shown up in the data. But a week before stuff started showing up in the data, let's see, actually. I think I got a link to it. So this is, my status. Haven't noticed anything unusual yet. Contract premium less than 1 million. So pull back to $20 seems possible, which is an opportunity. And let's see, where did it pull back to? Yeah, opportunity. Whales buy UDIP and premium spikes. People start posting unusual activity. Heads to 30, if not 45. And so this was, on November 20th. All right, WTF is going on with you these last 2 days while GameStop is also pumping. So, this is, the 20th. So that was over here. So what I should have done, so I've got to be learning from my mistakes. If it pumped up to 250, that's a lot of money. But, the high on Friday was 665, 675 on Thursday. So, yeah, I mean, I should have just YOLO'd in and just had more conviction in it. But, I'm also just happy to learn, happy to watch. And so we have seen, stock price go up to 30, getting pretty close to there or getting towards 30. So let's see, looking over here at the chart. Yeah, this is, what I've been tracking this channel. And so my thesis is that we could be coming up to like around 45. And so what might happen is, this is kind of like a third wind. There's this, big moves up here, and then this time consolidating pullback. And I had lost conviction because I was looking at it, 20, but then it dropped. It dropped into multiple levels, did a video, and I'm kind of partially really, really proud of myself for this, but also wish that I had more conviction in myself, in my analysis, because I was spot on with, let's see, I think I can delete that. I had this retracement here, which had the golden pocket here, corresponding with the neckline of this prior inverse head and shoulders pattern. Just beautiful 3 days of dip buying there, but I wasn't participating. I think I sold here. I just lost confidence, or maybe it's because I took I took profits. But yeah, I mean, I could have made a lot more money, but it's about learning how to manage and whatnot. And so, yeah, I mean, I had this alert here at 20, and I was just a little bit early, but it's good that I'm recognizing these things. I wasn't so early that I lost money. So, yeah, I mean, I'm happy for those. I'm not jealous. I'm not going to FOMO. I think that, 30 is kind of a number that is hanging out there, and maybe we don't get to it. Maybe we pull back, and actually, yeah, I mean, maybe I will propose that I don't think we pull back to the 786, but let's see, the golden pocket, or let's just say the 618. That I think could correspond very nicely with retesting over here, or maybe the 50%. And so, yeah, I mean, I think that this could be pulling back to this range, about $21 to $23. And that could be corresponding with the bottom before the next move up. But yeah, I would want to look months out into the future. And so this has just been like really, really helpful for me. In learning, getting better, whatnot. But yeah, the spike in volume that we just recently saw, that corresponded with $1.2 million, although we did see actually no, pullback in the IV, but still an increase. So yeah, actually this seems like it could still be going higher, but for me, I don't have that kind of money to put on the table. I don't have that kind of money to put on the table, but I do have that kind of money to take it off the table. And I had prematurely done that. Oh well, it is what it is. And so, yeah, the final one that I'll be doing, I'm probably not going to cover this again, is the VIX. That's the Volatility Index, $25 call expiring February 19th. I just kind of wanted to track this to see, what the overall sentiment was, as we do have the price for this ETF, this index, coming down, along with that premium coming down, whereas we do have these spikes in volume, which correspond with, $500,000 million. We have open interest going up, and we have the IV now getting above 100. So this is actually, getting pretty interesting. And if I do go over to the chart, this does look like, it has broken down. Not looking so great, but actually maybe that is one that I want to continue tracking. It's just, for me, I don't necessarily like to trade the VIX because it's only options. I like to trade the UVIX more. And so, yeah, I think that this is looking interesting. That's giving me more confidence in the UVIX that I hold, which I guess I can mention my analysis on that before closing this out. And so let's see, just pulling up the indexes here. Oops, that's the VIX. The UVIX, I had done a video on how, bearish 2 weeks, bullish 2 weeks, bearish 2 weeks, back and forth. But then we kind of broke the trend line over here, maybe got into a different regime because we didn't go up. But I was basically planning on trimming out of my position around 466, thinking, or 469, maybe, I can't remember exactly. Thinking that it might be bumping the resistance now, being below this uptrend. But then I have, been adding more aggressively with it down here. And my plan is really just to take profits at 10%. But if the VIX, if people are going long, millions of dollars are going long, this spike here, we see open interest going higher. This is a $25. Yeah, that's getting up to here. And so for those highs, if we were to look at that, that's potentially, getting up to 550. So I think I'd probably be selling myself short if I trimmed at, a 10% profit, which is, I think, probably around the line here, whatever my average is, 10% above that. But, and actually, yeah, because I'm sure nobody's, if you're actually watching this part of the video, let me know, because I'm curious if people actually watch me this much, because I'm flattered if you do. So my average, I have 130 shares at 379. And so let's see, at 379, just going to get the same measurement tool, 379, like right around there. Going up 10%. That would be, let's see, I can tell you, limit sell 417, right around there. But that's minuscule if it could potentially be going up to here. I feel like that's feasible. And, maybe 40%, 30 to 40% seems feasible, but just keeping that risk on the table, yeah, I don't know. I'm going to have to think about this a little bit more, but I do feel a little more confident that this could be spiking looking at this VIX data. And yeah, so I mean, with that being said, with all that stuff that I've gone over, this is a shorter one of these that I've done, less than 2 hours. But yeah, I mean, I am just continuing to learn doing this, continuing to manage myself, my positions, my contracts, expirations, how I average in my patience. And, I hope that sharing this stuff is also helpful for you guys. And if you do enjoy this content, please make sure you subscribe. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and I'll see you tomorrow night for Ticker Request Live Sunday at 9 p.m. Eastern. Take care, you guys.